Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, we're in the shadow of tomorrow's US non-farm payrolls report, which will give an important steer on where the world's largest economy is heading. But there were some labour market indicators out today ahead of that report. First, jobless claims rose last week. However, this was the usual seasonal increase, but little more, and were basically at the same level in the same week a year ago. Secondly, the Challenger job cut report for the US noted a tiny rise in November from the tiny level a month ago. But these levels were very much less than the same month a year ago. There is nothing here to suggest labour market stress is building. In Japan, there are a series of subtle signals coming out that the Bank of Japan is about to end its negative interest rate policy. These moves are expected over the New Year period. That saw the yen rise sharply. And exports from China unexpectedly rose by 0.5% in November from the same month a year ago, after a 6.4% fall in the previous month. This was their first increase in exports since April, but it isn't the gains that were expected and essentially dashes any hopes for an economic rebound in China. And Australian exports were 11.9% lower in October than the same month a year ago, down 0.4% from the prior month. But global freight rates for containerised cargoes rose 6% last week, no doubt due to the difficulties in traversing both the Suez and Panama canals. China to Europe rates rose 15% in a week, whereas China to the US West Coast actually fell. Meanwhile, bulk cargo rates peaked on Monday but have eased back marginally since. The US Treasury 10-year yield is unchanged at 4.11% in a basic holding pattern. And the price of gold will start today at just on $2,020 an ounce, down $10 from yesterday. And oil prices are staying down, unchanged from yesterday, still at $69.50 a barrel in the US, while international Brent prices at $74 a barrel. These are 5-month lows, and on an inflation-adjusted basis, decade lows. It is fair to wonder if the OPEC cartel has lost its influence. And the Kiwi dollar starts today at 61.7 US cents and 10 basis points firmer from yesterday. Against the Aussie, we're down 20 basis points at 93.5 Australian cents. Against the euro, we're up fractionally to 57.2 euro cents. That all means our trade-weighted index starts today at just on 70.6 and 10 basis points lower from this time yesterday. Get more news about the New Zealand economy from interest.co.nz.